We just talked about everything that's going on out there. With that in mind, what's your WEX word of the day?
So my WEX word of the day is heavyweight, and heavyweight as it specifically refers to the mega cap tech stocks. And as you saw last week, if tech goes, the market goes, and obviously that could work vice versa with heavyweight Apple reporting this week.
All right, so you're talking heavyweights. You also gave us some of your research about the growing influence of the Magnificent Seven and mega cap tech on the markets overall. So let's just start with the S&P 500. So just a year ago, those mega cap names, they had about a 20% weighting in the S&P. Now it's about 27%. What does that mean for investors?
Yeah, it's really there's been more contribution to return essentially. So if you look at how the S&P has done year to date, 90% of that contribution return has come from that Magnificent Seven. If you drill down to the sector level, I think I gave you the communications sector as well. That went from a weight that I believe was about 40% to 50%. So there are just these huge weights that are very concentrated in these tech stocks. And from an options perspective, what makes me a little nervous is the sentiment change has really gone from very positive, very optimistic, folks buying call options, to the opposite. There's a lot of waning interest in that upside, and there's continued demand for folks purchasing that downside and becoming more bearish on these names.
Give us a sense how dramatic of a change this is. You're saying you're getting concerned. So increased weighting of these mega cap tech names on all the major indices, also a lot of the big ETFs. We were just showing them a minute ago. And the sentiment's turning more bearish. What does that tell you?
Yeah, to give you some numbers to make it a little bit more helpful, when NVIDIA first reported its earnings, that was obviously a blow at earnings. That was the beginning of investors saying, holy cow, this AI could really be a thing. So we saw that demand for call options, we call it call skew, go to its essentially its 100th percentile. If you look back over a year, that has gone down to zero over that year. So it's gone to its absolute high point, call it back in the summer, to now essentially the lowest it's been historically. So when we talk about waning sentiment, we're really at polar ends of the spectrum right now for essentially all of the names in the Magnificent Seven, not just NVIDIA.
All right, a very dramatic reversal right there. We're looking at shares of NVIDIA, by the way, up just about 200% over the last year. Big jump this year as well. Also want to talk to you about Apple. Heaviest weighting in almost every portfolio, or weighting in a lot of portfolios, such an influential stock on the markets. What is the sentiment in the option market telling you about how investors view this report and this stock right now?
Yeah, so when you look at the option sentiment, it's similar to the other Magnificent Seven names we've seen, that waning upside sentiment, that bearish downside sentiment. Now, the one wrinkle to Apple is it's been a name that's already been hit because of its exposure to China. When you can, I look at its revenue exposure to China, it's much worse than all the other stocks in the Magnificent Seven. So that has already been hit. Now, one thing we're seeing that's a little bit interesting here, Frank, is there's actually a lot of upside purchases going on in the China-related ETFs like FXI. So you're seeing people sort of say, could we be at a point, a tipping point, where China actually could rally? You don't see that in Apple itself yet, but if that does happen, then that's probably mispriced from an options perspective, because again, we're seeing waning upside there compared to the FXI calls we're seeing purchased on the ETF itself.
Amy, I want to be clear. So when you say you're seeing more bullish bets on the FXI, is that also a sign? Do you believe that's also going to benefit Apple or hurt Apple? I just want to be clear.
So it's sort of independent, right? So FXI is just the ETF that is related to China. But what I'm saying is, if investors are right about the call on FXI itself, that China could have a rally from here, that would be a benefit to Apple because of how much revenue exposure is coming from the China region, both from the supply chain and obviously, potentially from any reversal in some of the orders they have.